Welcome back, everybody, to freetradingvideos.com. This is Matador. It is the 7th of April 2009, and seeing a little bit of a sell-off this morning in the broad markets. So closed up in here yesterday after the market. You can scrunch this up a little bit, chop around on its high, gap down this morning pre-market, and then rallied a little bit back up into resistance now. So we're chopping around, but we did have a good little bit of a rally here intraday. Watching the tick and the trend was interesting this morning so far because there's such a massive divergence between the trend Q, which is sitting at 2.0, meaning twice as much volume flowing into stocks that are going down, and the trend itself, which is showing that it's at below 1.0, right, and actually in 0.70 area, which is bullish, showing more stocks, volume flowing into stocks that are going up. So who's going to win that battle? I sometimes use the VIX as the tiebreaker, and at the time of the rally, this guy was hanging out on its low and selling off, and just a little bit of a spike here. So right now it's anybody's game, long or short, and we are definitely fighting, just kind of chopping around now. It's going to have trouble filling this gap. It'll be interesting to see if it fails below the support area. And I wanted to show you something kind of cool. If you look at a 15-minute chart, big gap down this morning, right, and it sold off right to the 200 MA, and almost a complete gap fill from before, but not quite. So the 200 MA on a 15-minute chart is actually going to be the 50 MA on a 60-minute chart. So right, so 15, 30, 45, 60. It takes 4 bars. The 50, 100, 150, 200. So there's 4 separate differences between the 50 and 200 MA, and you can see that on the 60-minute chart it did go down and touch the 50 MA on the 60-minute chart to the penny. So again, a chart is a chart. A lot of people will use the declining 200 on a daily chart and try to sync that up with the 50 MA on a weekly chart, and that's not quite as accurate. If it was exactly right, this would be the 40 MA. Right, so 4, 8, 12, 16, 20, that would be 5 bars, right, and exactly 5 days to make 1 week's worth of trading. So if this was the 40 MA on a weekly chart, it would match perfectly with the 200 MA on a daily chart. But between the 15-minute chart and the 60, they are exactly the same. So if you ever thought you were looking at a 50 MA right here, then that's exactly what it is on one time frame higher. So kind of cool to see that. Again, just sort of putting an exclamation point on the fact that a chart is a chart. It's a little bit of a bleed going on here. There are still some stocks that are exhibiting relative strength today. Again, I'm in them, so I kind of loathe to talk about them. I'm not trying to get anybody to buy into those, of course, full disclosure. But and some of those are running up right into resistance, so you need to watch out for that kind of stuff. Great. So the Dow is still below 8,000, which isn't necessarily a good thing, but it's not bleeding out either. So take a look, see who wins this battle between the trend and the trend Q. See if the VIX can pull one way or the other. It'll be fun to do a market wrap-up with you again today, since D7 is still out on holiday, vacation. I'll be back with you and we can talk about things. I'm also going to do a video right now answering some questions from the previous comments, so that'll be kind of fun too, so check that one out. Have a great rest of the day, everybody, and I'll talk to you soon.